There we go. All right, and we're back. It does appear. Let's just make sure we got YouTube online. We got... There we go. Yeah. We got YouTube online. We got DLive online. And we do have Twitch online. Sorry about that, guys. Not sure what happened there. Had a little bit of a crisis in confidence, I suppose. I guess BSV did not like watching that market maneuver. All right, good to see you guys. Most of you coming back in. Franklin MC, Indy Left News, Jag. We got Fifth Ronin. Okay, let's just carry on with where we were at. Remind me what we were talking about. Yes. Okay. So we were just finished up talking about Ethereum, movement from here to here, and I believe we had moved on to BSV. All right. On the KuCoins. Let's just look at BSV on Bitfinex. That's probably going to make it a little easier. Okay. So interestingly enough, KuCoin on Bitfinex did not have as pronounced as a drop. Let's take bottom feeder off and just look at where... Oh, I took the baseline off. I'll take bottom feeder off. Yeah, so on KuCoin, we actually got these dips all the way down to that $6 to $12 range. I think it was $13, $12 was the low it was. Here, again, although a fantastic drop on VSV, we can see the market has pushed it up. Now, what's interesting to note here is the Mink signal. Mink showing us the extremely oversold conditions with that curl back up. So it's possible we can actually get a move here from BSV. If we're able to close above this 169.081, it'd actually be interesting to see if BSV could run up to could run up to 251, because that's kind of the next significant level of resistance coming in off these peak highs that were formed back in May of 2021. Interestingly enough, when the market kind of fell down. So we'll see. We've got this long drawn out consolidation period with some decent volatility and some little mini trends. But if we kind of zoom out at the big picture, you know, BSV is yet to make its way back up there. But we do seem to have these kind of cyclical moves. Now check this out. What's interesting to note about BSV is that every successive wave to the upside has been a little bit higher. So if you really wanted to put your BSV moon boots on, you could be looking for at least a 200% trade if we wanted to get this back above $400, maybe even $490 and crack the all-time high. Could it happen? It absolutely could. You know, what I think interesting is, as much as I kind of talked and took the dismissive tone earlier, what is interesting to note is kind of the fundamental aspect of this asset and how it is kind of tied up with the whole Craig Wright, you know, identity and misnomer. And there does seem to be a lot of belief out there that somehow this jury trial proves that Craig Wright is Satoshi, even though it doesn't. That's what you'd have to be educated in Bitcoin and digital signatures to understand that. However, yeah, that's definitely an aspect to consider. So BSV, as much as I hate to say this, might not be a bad add here for kind of the long play, looking for this up to 490 actually. Long play, but this thing has repeated itself cyclically where each successive high has continued to form higher, at least since the splitting back in November 2018. All right. Thank you very much, Jordan Stotts. I highly appreciate the support, my brother, as always. Okay, moving on. What do we got? What else do we got for big movers of the day? We've got Tezos. Let's look at Tezos. Look at Tezos on Binance. Tezos, again, you know what I like about Tezos here is that each successive low has been higher than the last. All right, so we are respecting this ascending trend area, and just ignore the deviations from it because trend lines aren't supposed to be perfect. They're supposed to give an individual guidance. And again, very similar to BSV, each successive wave has been higher. So if we were looking for Tezos to get in on this buy zone, now we are obviously above it by about 50%. So any kind of deviations from this, anything I would say between 340. Now I hold Tezos long term. I like Tezos. Anything between 340 and 340, I would say, and $4 would be a fantastic buy-in area. We are coming up to this level of resistance right now, but on good momentum and good volatility. Now, we've been selling off for quite a while. We did kind of dip and hit this low in Tezos. So again, if we were looking for Tezos to outcompete previous all-time high, looking at least an 80% push to the upside on Tezos. And again, Tezos, I think a good, nice quality coin. Not a bad time to rebalance if individuals are in this for the long play. All right. What else do we got here? Big movers. BTT continuing on its tear. BTT has been on an absolute moon mission. And although it doesn't look it from this chart, we've had multiple great gains put in by BTT. Yesterday, we closed 35% up, on track to close today above 14% up. All the signals coming in for all the signals coming in here, potentially for a trend reversal. The buy-in on Minx is still going to be in its early phases with just hitting that oversold portion, and we've rocketed up quite a bit here. But we have Wada Atar flipping. We've got our volume indicator flipping as well. We're getting back up into that consolidation area. So we'd be looking for this to push above that 0.4 of a cent mark and continue on higher. Now, as far as BTT goes, BTT has its kind of likers, has its kind of haters, but listen, never dismiss the power of Justin Sun to pump an asset. All right. Let's see. Other big movers of the day. Obviously, we've got fan favorite and one of my long-term holds as well, Crypto.com. Let's look at Crow. So Crow USDT went on an absolute tear recently, moving up all the way about 500%. We did come all the way back down. Here's that wick coming back down to the baseline. Honestly, I think Crow looks like it's on sale here. I'm not going to lie. I like Crypto.com. I don't kind of see them stopping anytime soon. They definitely have the mass marketing appeal on lock. And again, we're kind of looking at discounts on a lot of these coins as well, guys. Now, listen, I'm not saying that the market isn't going to flip into a bearish trend here. I absolutely don't know. That's not the way that I trade. A lot of indications out there that we might have peaked or are at the top, but at the same time, you buy things that are valuable and you hold on to them for the long term. So not a bad opportunity to start DCAing into some assets that other individuals might be afraid of. In DLF news, I'm a hodler on BTT. So again, not bad opportunities here, guys. Crypto.com, if we break this all-time high, looking at current price upwards of 60%. 60% on BTT. Nice trend reset coming back down to the zero line here on Minx as well. So basically everything we've seen we qualify as kind of a dip buy or reversal baseline bounce opportunity, or as they're more commonly called, I guess, is called a pullback, right? A pullback in a bull market back to a level of support. Bob's your uncle. All right. 1144, doing pretty good on time. Let's take a look at one more chart. And then we're going to go out to the big scene, and we're going to talk about reasons that the market might and will crash. Let's look at Polkadot. Another long-term hold of mine. Polkadot looking interesting here. Let's see here. Correction followed by a big push to the upside. Back down to this kind of previous auto VWAP level of support. The only thing that's a little different here with Polkadot is that we are trading significantly below our baseline, and our baseline is curling down. Whereas on all the assets that we looked at, we were significantly higher and we dropped below that. Again, I like Polkadot. I like Polkadot for the long term. I like a lot of the projects that we're doing. So this does look like a good opportunity to get on DOT as well, down about 50%. So again, a lot of things on sale, a lot of things on discount. And again, even if you buy here and they move down further, that's the risk that you take. It's being a long-term investor. So again, do your research on these projects. Understand if you want to hold these for the long term. And if you guys want to simply talk about the tradability of these, then we're talking something different. If we're talking about swing trading Polkadot, we are below the baseline. So I could see price moving up here to the $38 mark. That is going to be about a 20% trade. But then again, as usual, we'll be looking to re-put on whatever markets we can do this on. Binance futures, Binance margin. Bybit has Polkadot as well. Be looking to reshort around that $38 mark unless we get some signs that we're actually going to continue back up, which will be closing above that $38, $39 mark, above that baseline, and getting that positive momentum in. Again, Minx in a similar area with these coins, extremely oversold, indicating a buying opportunity. But again, these are going to be reversal entries, slightly different than what we normally look at. All right. Let's see, one more here. Let me find one that I like. Excuse me, guys. Got to stop drinking that Diet Coke on stream. Let's do Kusama. Kusama, another coin that I like. Kusama looking very similar to Polkadot here. Breaking that powerful trend. Let's see here. Well, really wasn't a super powerful trend. We have high, secondary high, and then what's interesting is if without this recent market sell-off, we would have continued to make a higher low on our trend here. Came down again to that previous level of support around that 293, and we are surfacing above that. Mink's not in the oversold territory, so maybe Kusama is one we want to let wait and sit a little bit before we look for our entries on Kusama here. Maybe we can get down to that 208 mark. Another 30% correction. We'll see. If we wanted to see this trending back up to the upside, looking for that real strong trend indication buy, we need to see price above 368, and then of course all the other metrics flipping bullish as well. But again, Kusama, something that I like. Kusama long-term hold. So you guys have basically have seen my a good portion of my LTH portfolio there. Okay, with that being said, I want to go out into the main scene and talk about a couple things. All right, so market crashes. Why do they happen? Why will they happen? Why will they continue to happen? And is it possible that they may never happen again? All right, so we're going to talk about a few things here. The first thing is overall just I want to talk about reasons why the market might and will crash in the coming futures with regards to cryptocurrency and the stock market, traditional equities, what commodities will do in response to that, how inflation fits into all this, what the big indicator is as far as jobs and growth and recovery from COVID, the new COVID variant, Omicron, and then the monetary supply, monetary policy. We'll also talk about one other factor as well. To touch on what Jordan Stotts said earlier, typically the best kind of the strategy is for individuals as well. The strategy is for any institutional players or smart money that are involved in the market. And in a liquid market, even though it's not super illiquid, but it's hit and miss with cryptocurrency and something that is really being pumped up, right? I talked about this. I've been talking about this recently, right? About the surge of popularity of gambling, sports book betting apps, especially here in the States. You cannot turn on television without seeing a sports book betting app commercial, advertisement. And what that means, again, remember that marketers are only going to invest marketing dollars into things that they feel very confident about are popular. That means that gambling is very popular right now. That means that betting on sports is very popular right now. That means that leverage is very popular right now. Exchanges are doubling down with advertising their use of leverage to individuals that are trading on their platforms. And these are things that you should be wary of, because what it indicates is that uneducated and unskilled retail traders are beginning to flood and ape into the market. And when that happens, it gives a lot of opportunity for individuals to take advantage of them. All right. So this is why leverage is being promoted to individuals that have no business or no experience using it. This is why gambling is being promoted to individuals that have no business gambling and have no experience doing it in a professional fashion. And this is something that's extremely troublesome, right? Why would gambling be popular? Gambling becomes popular, right, when avenues to a safer and more conservative method of being profitable or making money seem elusive or non-existent. So this is as much a damnation, or this is as damning of our economy and our government's response to fix said things as it is to individuals' desires and want to gamble and be reckless and make big gains. Just to touch on that real quick, I do believe that the best way forward in profitability is to be conservative, is to learn how to preserve your capital, is to trade with risk management, and to implement a system that you verified and back-tested to be profitable in the past and in the future going forward. Yes, there is opportunities to take risks. I do take those risks. I don't belay other individuals from taking those risks as well. There are ICOs I've invested in. There are pre-sales that I've gotten into. There are NFTs that I've minted. There are there are positions that I've held for long periods of time. There are dips that I've bought. There are risks that I've taken. My entire life in this business, could be summed up as risk. But however, at the same time, what underlies and buoys all that is the objective technical trading strategy that I implement day in and day out. And I found that to be consistent. And that is what allows me to continue to drive and push forward, even when those other things are hit and miss or different or questionable. It's having a strategy and sticking to it. And it's really that simple. And to the effect that I've deviated from that and focused more on taking more risk is the effect that I've lost money. This is just true. Some individuals are lucky gamblers. I am not a lucky gambler. So there's a couple things going on. So the jobs report that was recently released in the United States was relatively not very good, right? Only 210,000 new jobs had been created, falling well short of our target of 520,000. Coupled with this is Jerome Powell's response to overall inflation, saying that he wants to potentially consider rate hikes moving forward. And that worries the market. The market worries about rate hikes because it means that they're not going to be able to get cheap, free money, that banks are going to have to kind of tighten up giving out loans. That is going to cause asset prices to drop, all other things being equal. That will cause cryptocurrency prices to drop, all other things being equal. And kind of what it reflects is that the economy has not recovered to the degree that we want. So here's a couple things. One, I would expect that Jay Powell actually turns a little bit more dovish as we move forward. That he kind of belays that idea of tightening up monetary policy. Now, we don't necessarily want monetary policy to continue extremely loose, because that is going to contribute to a large asset bubble. And asset bubbles crash much harder than even more pronounced but necessary market corrections, which is what we might be looking at if he does continue to adopt this hawkish policy. And again, hawkish, dovish, all that means is monetary policy, like tightening up the flow of money and the ability for banks and individuals to get cheap loans, tightening up monetary policy, restricting the ability of individuals and banks to get cheap loans, or being dovish, that's hawkish, or being dovish, which is being very loose with monetary policy and providing lots of loans to banks and individuals at very low interest rates. High interest rates are not necessarily a bad thing. They should theoretically put more money back into your savings account, and it means that individuals would earn higher interest on dollars held, which is why actually higher interest rates in the United States can actually strengthen the dollar if that's coupled with a growing economy historically. We don't necessarily see that because the unemployment rate, while it dropped, the jobs growth did not rise. So not exactly what we want to see, not the strongest signs of the recovering economy. And I don't think that either of the infrastructure bills that the Democrats, and I'm apolitical, have proposed are necessarily a good thing. The other thing to consider too, and this was touched on yesterday in the stream, is tax loss harvesting. I'm not sure to what degree tax loss harvesting can impact the market, but certainly if before, and by the way, if the Build Back Better Jobs Act passes, Build Back Better Act passes, then the crypto wash sale, then the wash sale rule is going to begin, it will be applied to cryptocurrency. So this is very important to note. Currently, right now, if you're a cryptocurrency investor and you have lost a lot on paper, on anything, what you can do is you can sell that immediately, okay? And then you can immediately buy that back. Well, so let's take one thing first. What happens if you've made a loss and you sell? That means you have realized a loss, and that means that you can take that loss and apply it as a right. You can offset gains on your tax return. You can offset your taxable burden by that amount. So if you lost $20,000 trading cryptocurrency this year, or let's say you bought Bitcoin at 65,000, and now we're sitting down below 50. Now we're sitting down below 60. If you realize that loss right now, then you can take that loss and you can use it on your taxable burden. Offset your taxable burden. Now you can't use all of it. There is a limit. It's $3,000. You can only offset $3,000. But what you can do is you can carry that into the future, right? So that means if you realized a $20,000 loss this year and you apply it and you report that to the IRS, that means that what you can do is you can take $3,000 off every year until that $20,000 is met. So you get about 7, 8, 9 years, because I can't do math very quickly in my head, that you can offset that. That loss. Now, currently, what you can also do is you can immediately just buy back whatever position you've lost. So nothing will really change minus a small exchange fee. You can, let's say you bought $50,000 worth of BTC, you've lost 20,000. So you still have 30,000 left of BTC. So you sell, you realize that loss, you immediately buy back the BTC, and then whatever's going to happen next year with your gains or whatever is calculated differently, and that applies to your next tax return. Now, that is legal. That is completely legal to do right now. But if the Build Back Better Act passes, then that will no longer be legal. The wash sale rule, which is this is already illegal in stocks. You can't do that in stocks. You can sell and realize the loss, but you have to wait 30 days from the day of sale to buy back your position. That's the rule. And in the Build Back Better Act, that is in there. That is now going to apply to crypto. Again, if the act passes, not sure if it will. Seems like it will. That seems to be the way that things go. Let's see here. So tax loss harvesting, reasons the market could crash. Now, what's the big reason? What's the big elephant in the room underlying cryptocurrency? It's US dollar tether. Okay. There is a clear correlation between market dips and tether printing moving to exchanges and and the prices of cryptocurrencies moving up. This happens over and over again. Okay. Now, one key thing to remember is that the US dollar tether treasury does not back every USDT dollar to dollar. Initially they said that they did. Under investigation, they said that they did, but they have now since changed their policy that says that they have cash equivalents or things like securities and bonds. Now, one other thing is Evergrande. This is the Chinese development company that we just got word of last week is going to default on their payment, right? They owe billions of dollars, and this Monday was going to be their first payment, and they defaulted on it. China has already stepped in and said that they will not bail them out. And the fact that they're not even able to make a payment of a couple $100 million is very concerning. All right. Now, why does that have anything to do with the US dollar tether? Well, the scuttlebutt is that a lot of the tether treasuries securities that they say they hold as cash equivalents are junk bonds. This might start to sound familiar because this exact same thing happened with Lehman Brothers back in 2007, 2008, right? Where a lot of these mortgage-backed securities, these junk, so we'll just put junk bonds and these junk credit rating mortgage-backed securities were held onto by investors, and then we were called on to meet their debts, which they said that they had in these cash equivalents. What they could actually do was only get pennies on the dollar for these absolute junk treasuries and securities, these junk bonds and securities, and that ended up crashing multiple companies and the economy with it. So that is certainly the elephant in the room when it comes to cryptocurrency. I don't think there's any way to get around the fact that we are in a large tether bubble, and we have kind of been in one at various points in time since 2017. It doesn't have to be all doom and gloom. This might not happen. Tether might be too big to fail. And it could be that they actually have good bonds, good securities that they're holding. I highly doubt it. The financial incentive out there to utilize the money in the now and to realize profits and to just kind of kick the can down the road and just do the bare minimum is just too great. We've seen too many companies do this. And the regulation is so loose in cryptocurrency that this is almost certainly going to happen. So if there is a large market crash, like a very significant one, I'm talking like another 2-year bear cycle or an 80% correction on all of our cryptocurrencies, then that is most likely going to be the catalyst for that crash. So end of year crashes, end of year dips, we've got tax loss harvesting, we've got monetary policy and sluggish economic growth. And then obviously the overbearing elephant in the room is going to be the Evergrande default as it's linked to the US Tether Treasury. Okay. So there's a free trading strategy for you guys. There's a lot of correlation to this. All you have to do is wait to see the market dip significantly, and then go see if if the Tether Treasury prints Tether and sends it to exchanges. If it does, you can almost bet your bottom dollar that prices are about to rocket, and that's exactly what we just saw right now. All right. It's no longer an elephant; it's a megalodon. Okay. With that being said, guys, that's kind of really all I wanted to talk about today. I understand it's a little bit of a shorter stream, but I've got a lot that I'm doing. I do want to keep up to date on my programming. I think potentially maybe here in a few weeks, I'm going to experiment with doing Monday, Friday shows and then focusing on a pre-recorded video that hopefully can be a little bit more widespread audience, maybe get some more views on the channel on Wednesdays. And then that'll also allow me to kind of focus more on the mentoring sessions and also allow me to focus on one-on-ones with individuals as well. let's see here. Yeah, that's pretty much all I have. Thank you guys for coming to another episode of the Cracking Cryptocurrency Show. I hope you guys enjoyed the content. Make sure to like and subscribe if you like this content. It incentivizes me to continue making it. If you guys would like to learn how to build your own objective technical indicator-based strategy, one that performs in any type of market cycle, make sure to check out all the offerings that we have at premium.crackingcryptocurrency.com, including our educational content, our automated trading signals, our analyst trading signals, our premium indicator suite, and our Discord community. Until next time, I will be back tomorrow at 11 a.m. Mountain Standard Time, 12 p.m. noon Central Standard Time for another episode of Cracking Cryptocurrency. And until then, trade safely. Make sure to tip your waitress. Cheers, guys.